Hi, this is Kerry Artak with Wicked Stocks, bringing you updates in the Mag 7 for the week of Monday, October 13th, 2025. We're actually bringing this to you on Tuesday, October 14th, a little delayed. This is a free video series we put out on our YouTube channel. I begin with Alphabet, symbol GOOGL. I just backtrack a little bit to the September buy signal above the 224.09 3-year channel top. That still indicates 264.24 to 273.57 as a 2 to 3 month objective. We did close last week below the low of the high for the first time, so we skew to the downside near term right now, like a 3 to 5 week potential for testing 224.09. This would be a counter trend move given our longer term anticipation of the 260s, 270s above 224.09. If we test 224.09 in the coming weeks, solid buy opportunity for Alphabet as we move through the rest of the year. We should then, by the end of the first quarter, push into the 264.24 to 273.57 area. On to Amazon. Amazon's been testing since we put out this series several months ago the 237.68 high weekly settlement price in January. The actual high itself is 242.52. This is a sell zone if you are more of a near to mid-term swing trader, selling the upper 230s, low 240s, and buying back at this point in time in the mid 210s. This rising channel bottom at 215.29 represents meaningful support, able to contain selling through the rest of the year. So you're buying 215.29, a 1 to 2 month swing traders, and you're holding out for the upper 230s, low 240s. If in the coming weeks we close above 242.52, we have a 2 to 3 month buy signal to 266.26, which is a 3-year rising channel top that should be respected for its ability to contain quarterly, if not annual, buying pressure. So profits taken at 266.26 if you're long above 242.52. A downside, once again, 215.29 is a base of support. This stock remains stable to bullish through the rest of the year above 215.29. But if we close below 215.29 this week, we've got a significant sell signal through the rest of the year and quite possibly well into the first quarter of next. Within 2 to 3 months, I would expect 191.36, a 5/8 downside Fibonacci from the April low to the more recent September high. It's also in alignment with the high of the low. So the low 190s would be our objective. I do think there's the very clear possibility of continuing south into the upper 150s. Now that doesn't really clarify fully unless we then also close below 191.36, but I do think you can act on that. If we close below 215.29, I think if you're an options trader, yes, you can reach for 190 strike out of the money puts that don't expire. I would go 6 months out on that 3-month play. You could also reach for 160 or 155 strike out of the money puts that don't expire for at least a full year on what I would call that kind of a 3 to 5 month or a 6-month play to the downside. It's very stair-step. I think the low 190s likely, the upper 150s possible with a settlement below 215.29. On to Meta. Meta is hanging on to a 7-month channel bottom by a thread this week at 170.11. Holding above the 7-month channel bottom will keep this 3-year channel top at 847.19 in reach over the next 3 to 5 months or sooner. That sooner would come with a settlement above 768.38, this newly formed descending channel top. If settled above, should yield 847.19 within 2 to 3 months, where once again we find a 3-year channel top able to contain buying through the first quarter, possibly well into 26. If you're a 2 to 3, 3 to 5 week swing trader, you're buying 710.11 and selling 768.38. If we close above 768.38, you're long again up to 847.19. Now downside, if we close this week below 710.11, I do think the risk is certainly to the downside, and I would not be surprised if over the following, there's plenty of precedent for this, 3 to 5 months, we find ourselves in the 530s. So closing below 710.11, I see no good reason to own Meta if your time horizon is 3 to 5 months or sooner. I do think the risk is in the 530s. At that point in time, if this were to occur, I wouldn't be interested in buying Meta on strength. I'd bottom pick 533.01 for sure, but if that didn't materialize, I would then buy it on strength in the weeks to follow. Sorry, wrong chart. With a settlement above this 768.38 formation or the equivalent thereof. And we'll keep you informed of this, of course, as we move through time. On to Microsoft. Microsoft has been in this sort of congestive, non-directional state for several months after testing this 5-year channel top at 565.47. We backed away. We closed below the low of the high. Now we've closed back above the high of the low. But the 509.43 to 511.97 area is still a near-term pivot point. We are above it. The likelihood is continuing up to 539.57 by the end of November. This structure can contain buying through the rest of the year. But if we close above 539.57, we retest 565.47 within another 3 to 5 weeks or less, where we could top out through the first quarter, possibly well into 26. This was a significant test, and in fact, holding below it or having tested it, one must allow for the possibility of the 373.49 5-year channel bottom. That doesn't become clearly indicated, in my opinion, unless we were to, over the next few months, close below 468.35. But I do see 468.35 as in reach if we close this week below 509.43. So if we close below 509.43 and you're kind of a 2 to 3 month position holder in Microsoft, and that is your time horizon, my suggestion is to be out of the stock or short the stock, anticipating 468.35, which is the significant July high of 24. We could bottom out here through the first quarter of 26 and round back up again. On to Apple. Apple, we provide to paid subscribers on our wickedstocks.com platform, but we do provide basic brushstroke analysis here. If we could backtrack a bit, it was in April that we tested a 5-year channel bottom at 195.72. After testing it, we'd mentioned within a year or two, the channel top at 278.63 should be considered in reach. And this is like 7 months later now, an incredible rally. On the way up, we did close about a month and a half ago above this 241.33 former channel bottom after holding for a month and a half. That indicated 278.63 within 2 to 3 months. So holding above 241.33, still expecting 278.63 over the next 2 to 3 months. 260.10 double top territory already happened several weeks ago. If we can close above 260.10, we're probably just another month, 2 at the most, from reaching 278.63, where we could top out not only through the first quarter, but possibly well into 26. This is an area where we could fall away into later 26. Downside, closing below 241.33, I have no interest in being long Apple through the rest of the year. I do think we can anticipate at least 225.95 and potentially all the way back to into the mid 190s. Now, at wickedstocks.com, we provide other formations that I think are more precise. I just am not going to provide them, of course, because we have people who pay for that information. But this is valid that we're presenting here. It's just not exactly what we present at wickedstocks.com. Excuse me. NVIDIA, we put out for free on our YouTube channel. You may be already a viewer of that every single day. I do like NVIDIA through the rest of October and really even through the rest of the year above 183.75. The tempo remains bullish above 183.75. This long-term target at 219.64 in reach over the next 2 to 3 months. And that pretty much covers the upside. 183.75 is also a downward pivot point through the rest of October. If we were to close below 183.75 this week, I see 171.31 as a likely 2 to 3 week target. I also throw out 182.05 here. This, if settled below, would underscore the likelihood for 171.31, but I do think that just closing below 183.75 is signal enough. Within 1 to 3 weeks, we should test 171.31. This formation, classic 3-4 month rising channel bottom at the top of a move, able to contain selling through the rest of the year. And from here, we can round up to this 219.64 area as we continue into early 26. By January, I'd say within 2 to 3 months, we should reach 219.64 above 171.31. Now, if we do close over the next few weeks below 171.31, that is a significant sell signal. I see no good reason to own NVIDIA, whether you're a 2 to 3 month swing trader anticipating 148.48, or perhaps within 3 to 5 months. I've already mapped out kind of the 110s. I don't show that here, but I do think there's the possibility for a longer-term route to the downside as we continue through Q1 of 26 if we close below 171.31, but we have not, and only if would that be signaled. Until then, we remain really bullish, very positive Nvidia through the rest of the year and into the first quarter of next. Tesla. We also provide every single day on our YouTube channel. We had a significant buy signal 5 weeks ago above this 2.5-year channel top at 362.93, anticipating 525.18 as a 5 to 8 month target. Along the way, we've had the 7-month channel top we mapped out as an area that could play spoiler at least near to midterm, and it has. 472.17 can contain monthly buying pressures, and having tested it, the downside is the more susceptible direction at this point. Over the next month or two, 362.93 in play again. If we can close above 472.17 over the next few weeks, then our objective longer term at 525.18 is likely within a matter of 2 to 3 weeks, where we could top out through the first quarter of 26, possibly well into 26. In terms of anticipating sooner than later 362.93, I think that comes into play with a settlement this week below 413.49, which is the low settlement price from last week. We sprung back over the weekend and we're holding above this, but if we close below 413.49, we're 2 to 3 weeks away from reaching 359.95 to 362.93, where we can bottom out through the rest of the year. Solid bottom picking zone here on weakness in the 359.95 to 362.93 area, and if we close above 472.17, that is a solid signal to go long on strength to 525.18. Last thing I'm going to show you is the SPY, a weekly bar chart of the SPY, the S&P 500 Spider ETF. The S&P 500 index looks identical. The S&P 500 E-mini futures look identical to this chart. This is a 5.5-year channel top that we've spent much of the last few weeks testing. And I've been mentioning to our subscribers, our paid subscribers at wickedstocks.com, and we give the precise point here. This is a sellable area longer term, and it's also near-term resistance for day traders, 3 to 5 day swing traders, 3 to 5 week swing traders, and 3 to 5 month position players, anticipating the possibility of falling back to the February high. We do at wickedstocks.com provide you a precise sell signal on weakness. There are elements that we have yet to violate to the downside that if settled below this week would clarify that February high as a likely 1 to 2 month target. If we can close above this structure, this 5.5-year channel top in the S&P 500 in the coming weeks, that tells me that the Mag 7, all those stocks I looked at, will also show probably, not all of them, but there will be this sort of updraft for all of those markets. And I could anticipate higher trade. If we can close above this 5.5-year channel top, there's a 3 to 5 month buy signal that is significant. Until then, the broader market remains susceptible to continued selling pressures that can build as we move into November. I think that pretty much rounds it out. I'm going to leave it at that for this week's Mag 7 update. You have a great week.